Welcome to Manage Your Damn Money with Ben and Malcolm, where we trade in personal finance advice for entertaining conversations about money, millennials, and the young at heart. Welcome, world, to yet another edition of our favorite show about money, Manage Your Damn Money, with Ben and Malcolm. I'm your co-host, Mr. Ben Carter, joined here by licensed financial advisor, Mr. Malcolm Ethridge. Sir, how are you doing on today, as the preachers say?
I'm good, man. I made it. I'll say it that way.
You told me you're doing something new now. Tell me about that.
I'm doing something new? Oh, well, something I should have been doing a long time ago. I'm actually making it to the gym in the morning, which has got my energy by like 2-3 in the afternoon on like 20%. You know, where your iPhone starts to turn red. I'm there. Like, yeah. So it's good.
When the phone changes colors to adjust for the lighting.
So it's been like, 4 weeks or something that I've been like diligently like forcing myself to actually go first thing in the morning.
That's a long time.
But it's rough, man,
Yeah,
by
I'm
like
sure.
this time of day.
I'm
So
sure. Well, I've had that issue, obviously, not going to the gym, but, dealing with triplets that wake up at 6:30 in the morning every day. You know, I'm actually used to it now. It's not tired. It's just like a glaze of exhaustion that trails from one day to the next.
you're just in a fog.
Yeah, there it is. Well, on this episode of Manage Your Damn Money, we are talking about a very simple yet very important topic. I was trying to think of a clever title for this one, but I couldn't, so I just decided to call it simply taxes.
People are going to tune out now. It's just like,
Indeed. But before we get into that, as we do on every show, it is now time for headlines. And this, I promise you, a much more entertaining headline than taxes. Millionaires and politicians keep encouraging young people to become plumbers. Cue applause track. Not applause track, laugh track. These people are actually doing it. This was a February 2020 piece on CNBC.com by Abigail Hess. As the cost of college has steadily risen over the past several decades, students across the country are beginning to question if earning an advanced degree is worth it. While research still consistently shows that earning a college degree leads to higher lifetime earnings, lower rates of unemployment, prominent figures in business have begun vocally proposing an alternative, trade school. And this is a quote: "I don't recommend college for everybody," says Kevin O'Leary, star of ABC's wonderful show Shark Tank. You might also know Kevin O'Leary by being Mr. Wonderful.
Mr. Wonderful?
Yes,
Yeah.
indeed. The fact is, there's a lot of trade schools that would help you make a lot more money. Be a plumber, they get rich. Everyone has to have a plumber, even in a recession, he says. Every single building on earth wants to have electricity and plumbing. These are the careers that actually can help you provide for your family forever. And Mr. Wonderful is also the person who loves royalty deals. Like, you only ever see him offer people royalty deals on Shark Tank.
Here's the interesting thing, though. If you were to come on Shark Tank with your pitch that you were going to open a plumbing business and be the most successful plumber ever, he'd laugh you out of Shark Tank. So for him to come on TV and say that out of his mouth is like, he also has said, I won't say questionable, but like ridiculous things about like proposing to your fiance, your would-be fiance, without a ring, or you don't need to buy a diamond in order to, like all those kind of things.
Yeah.
That I'm like, but you did these things. Like along the way, you are the person who did these things. He didn't go to plumbing school. He went to regular 4-year college.
Right. It is particularly hilarious. I feel like he's one of those sharks on Shark Tank that never actually makes any deals. He's just there for entertainment value. Anyway, the story went on to say, the businessman turned politician, who's also now running for president, Michael Bloomberg, has also offered similar advice. Today, he said, if your kids wants to go to college or become a plumber, you've got to think long and hard, he said in 2014 during an annual meeting of a Wall Street trade group. We learned that going to the trade school to be a plumber isn't necessarily as easy, cheap, and profitable as some has promised, but it can be a smart move or a smart investment for those who want to work in the field. According to the Bureau of Labor and Statistics, the median pay for plumbers, pipe fitters, and steam fitters was $25 an hour and $53,000 per year in 2018. In New York City in particular, the median wage for plumbers is closer to $76,000. There's a reason, but there's also a reason wealthy parents typically send their children to prestigious and often expensive colleges and universities. Earning a college degree from a reputable institution remains one of the most profitable investments that workers can make, Malcolm. So I kind of want to focus on a specific element. This story went on to actually compare the cost of like becoming a plumber and like going the college route. But in my mind, it's an interesting thing wherein you have extremely wealthy people suggesting that normal folks pursue trades. Are there any inherent problems with who is giving the advice and what advice they're giving?
Right. Again, Bloomberg is worth $60-some-odd billion. Right. He didn't make his billions of dollars
becoming a plumber
with the world's most profitable plumbing company. He made it by creating a multimedia conglomerate.
Yeah.
So to give me that advice, as you so obviously had the option to go that route yourself and chose something different.
He could have been a plumber.
Like, come on, dude. Now, if you had one of the world's most successful plumbers in the world who was worth $60 billion doling out this advice, I'd be all ears. Like, by all means, you can coach me on what it means to create a plumbing business. But don't talk to me about what I should be doing different and apart from what you chose to do just to keep me out of the billionaire club even further than like what.
That's what it really sounds like to me, which is a pretty cynical, like capitalistic thing to do. Like, let's drive more people this direction so we can keep folks out of this club.
Here's what I'll say though, because these are two both 60-something-year-old guys that are just way outside of the scope of like what actually is happening today. The thing I would say is our generation's vocational school, so our generation's plumbing, electrical trades, is the people that you see going to coding boot camps instead of going to Stanford or Harvard or whatever to be computer science majors. So they're saying, I don't need to go to a 4-year college to get the jobs of tomorrow. I'm gonna go to a boot camp that takes me a year to 18 months, get my whatever credential would be the equivalent of a plumbing certificate, and go to work. And so it does make sense to me to some degree that they're saying skip all the other stuff and just go for the technical education, but not specifically like go be a plumber. Like
that is a good point. That is a good point. Now I think this story focuses more to, and we'll put the billionaires giving the advice aside. There is something that is worth arguing, and that's whether the expense of a 4-year college degree is worth what you get on the other end. But we always have this discussion where I might occasionally lament my level of student loan debt.
Maybe occasionally.
Occasionally, not too often. And you always give me the following suggestion, which is, what would my life be like without those student loans, having not gone to school the way that I did, getting undergraduate and then a graduate degree. Explain to me what your thinking is with that.
Well, I mean, essentially you put it correctly. It's if you consider what your life would be like having graduated high school and then going to work straight on, where you would be now 15 years basically removed from there versus where you are now even with the student loan debt. So if you weigh those two options, I'm pretty sure you're still going to choose where you are today. So in that case, it makes it seem a little less burdensome and a little more like, it created an opportunity that wouldn't have existed. And I know this for a fact. You want to know why I know this for a fact?
Please tell me.
Because you have lamented to me multiple times about the job you had at Sunglass Hut and how you knew that was not the place you were meant to be for the rest of your life. However, I gotta think that that's about where you would have the glass ceiling, let's say.
I like to think I would have ascended to maybe like regional manager or something at that point,
Okay. Sure. Except for the fact that you would have had a 19-year-old boss who was the college undergrad who got the job over you because he had a year of college. And now he's your boss and you're like, I got to do something different.
And herein lies
And
the
at
rub.
that point, you got triplets, you got a wife at home.
Now I'm really
all
screwed.
those all those things. You're like, so
Indeed.
I like to think my hypothesis is pretty close to true.
I think so. So it's an interesting conversation and question in terms of what, which path is the better path. What's true is you can't go back, and you have to think about the fact that you can't actually reverse time and make a different decision, and especially when the fact, if you decide not to go to college, which is a completely acceptable choice, it's much more difficult, especially if you're like a high school moving into college age, to go back when you're older and you have more of life encumbrance in front of you. So yeah, just something to think about. Well, I remind people you can catch past episodes of our show, Manage Your Damn Money, on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Please, 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 we need to start making this like a front of the show kind of plea. Leave us a rating and a review on any of those platforms. That helps more people catch the show. If you have a question for us or a topic you want us to cover, send it to us, info@manageyourdamnmoney.com. And of course, you can always catch us on the gram and Twitter. Malcolm, what's your handle?
At Malcolm on Money.
And of course, mine is at MYDM1. You can also catch us on Facebook, facebook.com/manageyourdamnmoney. This is MYDM with Ben and Malcolm. We will be right back. Welcome back to Manage Your Damn Money with Ben and Malcolm. In life, there are some whose work and impact on the world are so profound and so long-lasting that their reputation and the body of who they are to us needs only a single word. Gandhi, MLK, J-Lo, Kobe, Obama, Denzel, Rihanna, LeBron, Messi, Beyonce. But there is no one name in this and in other parts of the world that looms large over all of us and our work, and similarly needs only one word to describe it: taxes.
I thought you were going to say Uncle Sam.
I guess that would have made more sense because it's a name, right? In this episode of Manage Your Damn Money, we are refreshing your memory about all the things you need to keep in mind as we approach the filing day of April 15th, or should I say filing deadline of April 15th, 2020. And quick note, Malcolm, do you know on what day, and I kind of gave you the answer already, Manage Your Damn Money first launched as a concept? What might you say that would be?
April 15th of the 99 and the 2000.
Ding,
Final
ding,
answer.
Ding, ding, ding. It was April 15th, 2011 specifically. But Malcolm, why don't you tell me your most memorable experience with taxes, just to start?
When I first found out what it meant to pay them. So I had, my very first job was at a store, like my very first on the books job, I should say, not cutting grass and washing cars and stuff.
Right.
But I worked at a Halloween store called Halloween Adventure. And I don't even remember what I got paid. Let's say $7 an hour or something. And out of that $7 an hour, 20% of it or something went to pay for taxes.
Oh, so you were looking at it on the pay stub.
Yeah. So when I got my very first paycheck, which was, 2.5 weeks or something, because the way the cycles line up, I was like, man, I'm about to
be rolling
this $200 is gonna be. It turned out to be like 158 or something instead of 200.
That's funny.
And my feelings were beyond hurt. So like that was my first meaningful interaction with taxes.
That's actually hilarious because I didn't think of that as one because I think for a long time I just kind of accepted it as part of it. That's an interesting thought.
I knew it existed, but I didn't know what it really meant. You know what I mean?
You was Birdman hand rubbing, like,
right.
Ready. Well, I'm trying to think of mine. I feel like I've told this story before, but I will say what it taught me. And the story that I'm referring to is the fact that like there was a year where I was like working independently and I made a certain amount of money working independently. And then first of all, on April 15th, I had to pay that bill because I wasn't paying quarterly. It was like between state and federal was like 10 grand. And it was like the hardest financial pain I ever felt in one moment ever. And then the other side of that was there was still something that happened that was left over to be paid. And so I had a balance to pay with the IRS. And so I was like, all right, let me get on a little payment plan, start a payment plan or whatever. And then it lasted until the next cycle of taxes.
Jesus.
And this is the cycle where we had the triplets. And so we got that. Now it's a $2,000 per kid thing. And I'm like, oh yeah, bet, like we about to get this money and then they deducted that amount that was still left.
So
from
the IRS was like, we about to get this money.
I literally, I'll never forget. I was so confused. I was like, why is it not X amount that TurboTax said I should be getting? Why is it this amount?
Yeah.
And it took me like a good 5 minutes to like go through the research and realize, oh, they deducted what I owed still. So anyway, probably my most hilarious interaction with taxes personally. And that's when I actually learned too, that owning a business and having your own business, you need to make a lot more money than what you need just to pay your bills to be able to do it. But anyway, to the conversation at hand, talking about taxes, what you need to know about your 2020 taxes. This is an Investopedia.com piece by Jeff Stimpson. The first thing that he mentions, brackets and rates. These are the rates you'll pay on earned income. For the tax year 2020, the top tax rate remains 37% for individual taxpayers filing as a single person and with income greater than $518,000, which is a modest bump from the $510,000 it was in 2019. The income threshold for this rate will be $622,000 for married couples filing jointly, so that's if you're married and you're putting your money together, and then $311,000 for married individuals filing separately, Malcolm. So what does it mean that the top tax rate for earned income is 37%?
Basically that if you are a person who earns $414, like you just said, or you're a person who earns $5 million, it doesn't matter. The top amount that you're going to pay in taxes on every dollar after know the next bracket is going to be 37%.
Right, indeed. And that bracket continues, 35% for single, and then married filing separately, income exceeding $207,000. It's $414,000 for married filing jointly, 32% for single with 160. It's a long bracket. It's gonna take me a while to get through this. This is not working out as I thought it would. But what you could look it up on the Google machine. But what's the idea essentially behind a progressive tax structure where this band of people pay X amount and then the next band below pays a slightly lower amount and so on and so forth?
Well, so initially the idea was that it would mean that the folks at the lower end of the income scale would pay a lesser dollar amount than folks at the top end of the income scale.
Right.
So if you're a person who makes $50,000, it doesn't seem fair that you would pay more in taxes than a person who makes $500,000, for example. And so the progressive tax scale was designed so that you weren't paying the same percentage taxes of your income as a person, at the bottom or at the very top. So it means that, the first $100,000, let's say, gets taxed at one rate, then the next 100,000, then the next 100,000, and so on, instead of, like I said, everybody just having kind of a flat percentage.
Right. And the theory is that the person at the higher end of the income spectrum can manage to pay a greater share of their income towards taxes than a person who has, say, like much smaller amount of income that they have.
Precisely. So the amount that you're paying in taxes as a person who makes $500,000, let's say, you can afford to miss it a little bit better than a person who's making $50,000 can.
Right.
Yeah.
Indeed, indeed. Then the next item that Jeff Stimson mentions, capital gains on long-term capital gains. So, Malcolm, I think this warrants a question for you. What is a capital gain?
So to break that definition into two pieces, so capital is any asset that you own. So whether it is stocks or real estate or a boat or whatever, it's an asset that's not cash.
Right.
And so if that asset appreciates in a meaningful way and you sell it, you realize the gain on that asset. That's a capital gain.
The difference between what you bought it at and what you sold it at is the capital gain.
Correct. Yep.
Indeed, indeed. So it's 0% for single and married filing separately. Jeez, these acronyms. Income up to $40,000, and that's up to $80,000 for married filing jointly, and up to $53,000 for another designation. Then 15% between another income band, which is $40,000 to $441,000. So that means that capital gain is going to be taxed at 15%. And then after that, if you're filing single and exceeding $441,000 in annual income, that capital gain will be taxed at 20%. So again, you see that progressive structure where depending upon where your income is, they're only taxing you this percentage. But it does lend a question. Earned income in this instance in the United States is taxed at a greater rate than capital gains. Why is that?
Two reasons. One, because the capital gains tax is on assets that you don't actually have to actively do any work to have it appreciate.
Okay.
So if you think about owning rental real estate, for example, it can appreciate for 20, 30, 50 years without you having to do any real meaningful active work to have it appreciate. So if you were to own it for 50 years, turn around and sell it, you'd pay a capital gains tax on the 50 years worth of gains. Whereas ordinary income is stuff you actively have to work, presumably.
Right.
You would have to actively work every year to generate income on. And so that's taxed at a higher rate because it's something that you're doing on a yearly basis.
Right.
Whereas the capital appreciation the asset appreciation that you're paying capital gains taxes on could be a very, very long period. And so they don't want to disincentivize you from owning those capital assets that appreciate over time.
That still, in a way, seems backwards. Like, wouldn't the earned income be more valuable to the individual than, say, a capital gain type asset?
No, the earned income is more valuable to the Internal Revenue Service. And so that's why it gets taxed at a higher rate than...
I see.
Yeah.
All right. Indeed. America working as America does. Well, another item that Jeff brings up in this particular article, deductions. Malcolm, another opportunity for you to show off your knowledge. What's a deduction and what purpose does it serve?
So essentially, a deduction is the IRS's way of saying we recognize that that activity that you did throughout the year cost you some significant change, right? And we don't want to penalize you for doing that thing. So we're going to give you a little bit back because we know you spent a good piece of your income on
off the top of existing in this space.
Straight up. So,
here's what you get.
Because it's going to cost you money to live and be a regular human every single day of your life.
Right.
And so rather than nickel and dime and try and figure out what the exact amount is that it costs you to be a regular, ordinary person.
Right.
We're just going to give you a deduction straight out the gate to account for whatever life stuff has happened.
Right.
It's also structured so we have the flat deduction for individuals and couples.
Right.
So it's roughly $12,000 and $24,000 a year. The standard deduction is what it's called.
Right.
That basically is the IRS saying, I'm going to simplify things, and instead of you having to account for every single thing you've spent money on through the course of the year that may or may not be deductible, I'm just going to give you a flat deduction, and it's up to you to determine to take that or go through the process of pulling out that proverbial shoebox with all the receipts and all that kind of stuff.
So
it
they're
cuts
spotting you $24,000 if you're married, or $12,000 if you're filing single. Interesting.
Right.
Okay, interesting.
So it basically simplifies everybody's life on both sides. The IRS can just say, look, Ben took the standard deduction, case closed.
He's good on that.
Nothing to ask questions about. And you can say, all right, I don't have to worry about keeping track of all the things that I did through the course of the year.
Indeed, indeed. The final item that we pulled for this particular article, retirement plans, the contribution limit for employees who participate in employer retirement benefit plans such as 401ks and 403bs Most 457 plans and the federal government's thrift savings plan has been increased to $19,000 or $19,500, up from $19,000 in 2019. The catch-up contribution limit for employees age 50 and older increased to $6,500, up from $6,000 in 2019. And the contribution limit for simple retirement accounts for 2020 has been raised to $13.5, up from $13,000 for 2019, Malcolm. So this is an interesting little like curveball type thing. We think of retirement as this thing that, or retirement accounts as a thing where you want to pump as much money into them so you have the money for later when it's time to retire. But there are actual income limits on different retirement accounts and tools. Why would the government place caps on those things?
Essentially, it's because, so to take one step back to answer that question, anything that you just outlined is what's called a tax-advantaged retirement account.
Indeed.
So the money going into it is pre-tax, which again means that it's before the IRS gets a chance to get their hands on it.
Right.
So if you're a person who makes $50,000 and you decide to contribute the IRS maximum $19,500 into that account, you have just taken $19,500 out of your ordinary income that is taxable to the IRS. If you're a person who makes $100,000, you have now made $19,500 untaxable to the IRS.
Right.
If you're a person who makes $500,000, they don't want you to be able to shelter 50, 100, 200,000 of that
There we go.
from being taxable to the IRS, because there's a reasonable it's a reasonable assumption that you don't need the whole $500,000 you just made to live off of if you're a regular human being. So you would presumably put away 100, 200 of it into this retirement account that's pre-tax, unless they put these caps on it to keep you from being able to abuse it that way.
Right. So it's an interesting thought. And a first question for you. Lots of criticism was laid at the feet of Donald Trump's 2017 Tax Cuts and Jobs Act. But one thing that reads positively is that in general, for middle income folks, the tax rate does have its advantages. Politics aside, what are the challenges of getting these rates and spectrums of who gets taxed right? Like how do you get it correct? You know what I mean?
So there's a lot of people from the economics world, especially the academics, who argue that a flat tax is better for everybody. Right. A flat tax being 10% of your income is what you pay to the government regardless of how much it is that you make. So these progressive levels that we're talking about, up to 37%. It used to be 39.6 at one point. Folks have argued that no, it should be 10%, 12%, 15%, and the person who makes 50,000 pays 15%, the person who makes 5 million pays 15%. Right. The person who's making that argument is also likely a person who's at the 5 million, range, not the person making 50,000. Right. Because at the lower levels, the numbers pretty much end out to be about the same thing regardless of what you decide to do. But for the upper income folks that the Tax Cuts and Jobs Act really was designed to assist, that matters more than it does to anybody else. Right. So
because the numbers are bigger.
Yeah, the numbers are a lot bigger, and so one small fractional change in any direction makes a significant difference in how much you end up paying, over to the IRS.
Yeah, I have an interesting experience that I'd like to share really quickly, if I can. I went to Paris and London with my wife and her parents, and I'll never forget, we went to some restaurant. Yeah, right. We went to some restaurant in Paris, and we sat next to a couple that was visiting from London. The young lady was a nurse, I think, and the guy was like an investment banker. So I'm thinking like, oh, okay, he's good, right? And then when it came time to pay the check, like his card didn't work or it didn't go through, and there was this
you being real nosy.
It was. Okay. I mean, they were sitting like right next to us, like arm's length distance away. So it was difficult not to be able. And at that point, we had already had a conversation or whatever. And so I was like, he's an investment banker. He shouldn't be having any issues with paying for dinner. And yet there was this big I thought they were about to get sent back to wash dishes or something. And it caused me to look up the tax structure or the income earned tax structure in London, and it is insane. It is like, and I have it here, if you make between 11,000 pounds and 46,000 pounds, 20% tax. And this is in the UK. Between 46,000 pounds and 150,000 pounds, 150, which is like, in America, if you make 150, like you're decent. 40%, which is really high. And then if you make anything over 150 pounds in the year, it's taxed at a 45% rate. But what I also noticed in the UK, healthcare is ubiquitous. Universal healthcare. You know, college, I think, is like free, if not close to free.
The retirement system is more accessible.
Absolutely. So it's this interesting thing where the social situation or whatever it is in the United Kingdom specifically, the populace has accepted these really high taxes in exchange for high services, in effect. So it's like, how do societies, do you think, come to a conclusion about what they're going to offer their citizens versus what they're going to tax people?
They give it to them and they say this is the way it's going to be.
Okay.
So we've talked often, and I usually will talk about it in jest, the fact that like in this country, it's almost impossible to get anything new done.
Right.
Because you're constantly going to be met with a barrage of political attacks on one side versus the other, and everybody is going to look at it and see what's being taken away from me, and I'm going to get hard fixed in my opinion on this thing.
Right.
And so we never really make any meaningful progress in either direction.
Right.
That's the way I see trying to change anything meaningfully to what you're talking about now. It's the reason why every time the tax code gets modified, the very next, what's it called? Cabinet that comes into place, they're immediately going to work with the president trying to figure out how to fix the tax situation
from the
to
last
accommodate
iteration.
the people who it'll benefit more on their side.
Right.
So you had the Trump Tax Cuts and Jobs Act that happened in 2017, but prior to that, you had the Obama era tax cuts, actually increases that happened against wealthier people with estate taxes and things like that. You had the George Bush tax cuts that existed before that, and so on. So everybody's had their own ways to go about affecting change through the IRS. Nobody agrees what the system should be or who it should benefit more.
Right.
It's just one of those things that it keeps on becoming this political, engagement, if you will.
Definitely. Well, I thought that was an interesting thing, getting to see how the taxes work in a different country. But I want to remind people you can catch past episodes of Manage Your Damn Money on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Please leave us a rating and a review on any of those platforms. That helps more people catch our show. If you have a question you want us to answer or a topic you want us to cover, send it to us, info@manageyourdamnmoney.com. And of course, you can catch us on Legram or Twitter. And my handle's @MYDM1. Malcolm, what's yours?
Malcolm on Money.
And of course, you can catch us on Facebook, facebook.com/ManageYourDamnMoney. This is MYDM with Ben and Malcolm. We will be right back. Welcome back to Manage Your Damn Money with Ben and Malcolm, where we are having the simple conversation of taxes. Another article that we pulled for this particular show, determining the best way to prepare your taxes. This was a March 2019 piece on nerdwallet.com by Tina Oram. There may be a million ways to skin a cat, but there are only 3 ways to prepare your tax return. Number 1, bust out the calculator and fill out the paper forms yourself. And I remember doing this when I first started getting like W-2s. I think I learned how to file taxes. I've mentioned this name before on the show. Mr. Chuck Maloof, our economics teacher at John Muir High School in Pasadena, California. Shout out to him. Also learned how to balance a checkbook there for no particular reason at all in the 21st century. Number 2 option, buy tax software that does the math and fills out the forms for you. This is, as an adult, my most trusted and tried and true methodology. And then 3rd, you can hire a tax professional to do the heavy lifting, which Malcolm, I know you have done. Have you ever filed your tax paperwork on the paper on your own?
Not since high school.
Okay.
My dad taught me how to do it with, I think, that first job I was talking about earlier in the show.
You filled out like a couple lines.
Yeah, with my like $8,000 that I made, or maybe.
You was balling,
right,
brother.
Exactly.
Oh,
like
dang.
maybe that's how much I made for that year. But like he showed me how to do it by hand, the 1040 easy.
Right.
But by the time I was in college and had like a meaningful job, I was using TurboTax.
Indeed. I can't remember exactly when I switched over, but it wasn't long. I might have done 2 like hand prepared ones because it was just super simple, and then maybe I moved on. But the first question you have to ask yourself in terms of which solution you're gonna use is, how complicated is my tax situation? If it's not complicated, if income from your employer is pretty much the extent of your financial worth, which sounds like what we were in high school, you take the standard deduction and haven't had any big life changes, you might be able to fly solo on your Form 1040. You may not even need to use tax software. And I remember, like, for what taxes feels like in terms of it being like a big boy and big girl type activity, I was like, oh, that was relatively simple when I filled out the paperwork, like, by hand.
Yeah.
It wasn't as difficult as I thought it would be. It was just like a few lines, and I was like,
if you're a person who has a W-2 income and you don't own anything, like real estate,
right,
you can fill out the 1040 easy yourself within like 10 minutes.
Right, and be done with it. Then if your situation's sort of complicated, many people have to fill out supplemental forms and schedules on top of the Form 1040. In that case, tax software is usually the best way to prepare your taxes. If the alternative is doing things by hand, it can help handle the workload. And then if it's really complicated, those that involve businesses, extensive itemizing, or big life changes such as a divorce, for example, it may require more human guidance. Some high-end versions of tax software offer good human tax pro help on demand, but the best way to prepare your taxes may be to hire an in-person tax pro instead, Malcolm. So quickly, where are you now with your tax situation in terms of what you do?
As far as what I do personally?
Yeah, for you personally.
I've had an accountant for 6 years now, I think.
Okay.
It is beyond me even bothering to try at this point. So frankly, I mean, like, my tax situation has expanded over that period of time.
Right.
But realistically, what you end up paying to like an H&R Block or somebody like Jackson Hewitt or whatever the franchise retail version of sitting down with a person is,
right,
you end up paying about that to a practitioner who's in private practice anyway,
right,
with probably a lot fewer mistakes.
Right.
So to me, it's like, you might as well spend the couple $100 that it takes to work with a real person to make sure that you don't mess something up, especially people who like own rental property, or you've got 1099 self-employed income, stuff like that. TurboTax is a great guide for those kind of things, but I'm still a little concerned about like the opportunity to make mistakes.
I see. What precipitated you going to find like a professional? Because I imagine there was something in your life that was like, and I don't know, because you had the house in North Carolina for a long time.
I had a rental property that I went to TurboTax to have them work with me on like preparing my taxes for, away from, did I say, no, I went to H&R Block, to have them work with me on it to get away from doing it myself on TurboTax, because once I had a rental property, it kind of changed things up. And I may have known just as much as the person at H&R Block who did it for me with my, bachelor's degree and zero experience. And so the one time that, I got a letter from the IRS saying you owe us more money because you made a mistake, I was like, nope, done.
That's
Call it a
hilarious.
day. Like
You was like, something's not right here. Why? They're like, I think you're right.
Kind of like the question she was asking. I was like, have you done this before? You know what you're doing? Like, or the things that I would ask a question and she would say like, oh, you don't have to worry about that. And I was like, okay. That kind of thing. So after 1 year of that, I was like, nah, I need somebody who went to school for this.
That's funny.
And has got a few letters after their name.
Indeed. Well, some other considerations for you. How much do you want to spend? If you do it by hand, obviously preparing a paper return by hand is basically free, except for the postage and, of course, your time. Basic software is the next step, which you can expect to spend $20 to $50 plus for extra state return preparation and e-filing, and that's if you're using like a desktop version of the software. Then of course there's more advanced software. If you're itemizing, filing more than one state or have more than basic tax life, then you'll probably need to upgrade to a more sophisticated version of tax software. That can run anywhere between $50 and $100 or more, and prices tend to rise in mid-March as April tax filing deadlines approach. And then, of course, there are free options. There are many software providers offering free online tax preparation options, but they usually work only with simpler tax situations. And then another free option, which is the IRS's free file program, which will match you with free name brand software if you have an adjusted gross income of below $69,000 a year. And then, of course, as Malcolm mentioned, you can hire a tax professional, which will run anywhere between $294 for an itemized form of 1040 with a Schedule A and a state return on average, according to the National Society of Accountants.
So here's what's interesting real quick about what you just said about the IRS offering the free file option. So $69,000 household income is the threshold for them for determining whether you can use it or not. That's like 70% of the country. However, only like 5% of the people who are eligible for it actually use that.
Oh, wow.
So part of what the IRS found from doing an internal investigation in 2019 was that the software providers like TurboTax, I can't even think of who else is it because there's such a brand name, but there's like 10. They bury the free file option on their websites so that you'll still click to use the paid version of $20, $30 or whatever it is to do a simple one, where you could have done it for free if you had clicked through far enough to find the free version of it. So in 2020, the IRS released a mandate that they have to make it very clear like where the option is for the free version, which is likely to kill a good bit of the business that they would have been able to get. So we'll see this year after tax season goes through, like how meaningful that change was and how many people actually read to see that they have that option. But I thought that was really interesting that they have gone as far as like burying it, even though the IRS is like, we want to make it easy and free because we want our money.
Right, indeed. Well, it's an interesting thought though too, at what point people know it's time to graduate to that next level. I know, and you know this about me personally, because 1 year you referred me to your tax guy to help me. It wasn't at the time what I understood myself to be doing, but I was essentially trying to understand how to do one particular thing as it pertains to some business elements of not my taxes, but of the MYDM side. And I didn't know, I didn't actually know what I was doing in terms of filing that side. So I was like, let me talk to Malcolm's guy so I can figure out how to do that properly such that I can continue to do that from here on out. And he helped me with that. And I think he filed my personal taxes. And then after that, I used that knowledge to do it the following year without having to hire him again. And that I found was valuable for me. At what point do people or should people consider like, okay, it's time for that next step in terms of whatever the solution is?
So to go through the scale real quick, like I mentioned, you've got the folks at like H&R Block, Jackson Hewitt, those kind of places that they have to pass some level of tax preparation specialist, boot camp or
and there's
something.
Various levels of it too.
And that's the challenge. There's like 5, 6, 10 different certifications that you can get that say you know how to color within the lines, basically. The tax prep software does a lot of the work for you, so they just are clicking through drop downs the same way you would through TurboTax at home.
At this point.
So it's like, okay, I could go pay them, but if I want to take it a step further, I could go to somebody who's called an enrolled agent, which you've actually got to go through a good bit of coursework and then take 3 exams that the IRS requires you to sit for that say that you have a decent enough understanding of the material to be able to do this on behalf of other people, and also allows you to represent clients on behalf of the client to the IRS if something was to go awry.
And therein lies the actual difference, as I understand it. There's a point at which, when you get a certain designation, a person can be responsible for representing you.
That's the enrolled agent, the EA.
So, and that's a person who has the highest level of responsibility.
So a CPA, a certified public accountant, is above that.
Okay.
Certified public accountant actually has gone through the process of getting a master's degree in taxation, has a whole bunch of hours as a practitioner before they can sit for the exam and so on.
Right.
But they're also going to charge you for that level of expertise.
Sure.
So if you don't own a business and your personal financial situation isn't so, sort of out of the box that it warrants a person with that level of expertise, an EA is just fine.
Right.
But still, in both of those camps, those people are willing and able to go on your behalf to the IRS and submit letters and that sort of stuff to kind of clear up any discrepancies.
Right.
Anything separate and apart from that, you're on your own.
Right.
It's important to also know that if you're a person who's signing off on that return saying, Benco tax filing did the return for me, but I'm signing saying that what he did is accurate and right.
That's on you.
That's
not
on you, not on that person or that entity.
Right.
And so it's important that people understand that too. Just because you paid somebody else to do it doesn't mean that you don't have the responsibility for what the document says.
Right. Final question before we close the show. What's the most important thing to remember when it comes to not filing properly, but reporting your income to the Fed and to the states?
That you don't have to know it yourself probably is the most important to me. So a lot of times people will try and Google the answer, like where you were just talking about filing for a business entity and learning that is not the same as an individual.
Right.
But Googling it to find out the answer could take you years to get to a point where you get to a legitimate answer. Whereas you could have just called a professional, had them do it in 5 minutes, they could have told you the answer and you'd have been on your way. And now that's something going forward for however many years that MYDM exists, for example.
Right. I can say certainly that was my experience. Like this answer that I got from your tax guy in particular, I would have never have known or even known where to look for it. So it's definitely when it's necessary, pull out the big guns and maybe try to, if you can or need to, hire someone. And remind you can catch past episodes of Manage Your Damn Money on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Please leave us a rating and a review on any of those platforms. That helps more people catch the show. If you have a question or a topic you want us to cover, send it to us, info@manageyourdamnmoney.com. And you can always catch us on Instagram and Twitter. My handle is @MYDM1. Malcolm, what's yours?
@Malcolm on Money.
Once again, thanks to our partners at Montgomery Community Media for their amazing hospitality. And once again, until next time, be good with your money.
Peace.
Peace.